So what is Bitcoin exactly? Simply put, it's open source software. And so it's not so different actually than, say, the internet, or in particular the TCP/IP underlying protocol. It's not so different from Mozilla Firefox, which is the open source browser for email. Not so different from Python, which is the dominant programming language, and not so different from Linux, which is the dominant operating system, and Git, which is the dominant revision control system. So not only are each of these the dominant open source software in their particular application, but they're all open source, they're decentralized, they're permissionless, and they're neutral. Each of them are fundamental to the world economy. In particular, the most obvious ones are internet, email, Python programming languages. Linux operating software is everywhere. It's used by most of cloud computing, and Git is incredibly important in programming. And so, yeah, most of the world economy now is built on these open source protocols, and I foresee a future where Bitcoin will be a new addition. So to understand Bitcoin, it's best to, perhaps easiest to compare it to the internet. Okay, so with the internet is basically, you could break it down as an abundant information transfer protocol. So what I mean by that is information can be copied. Okay, so I can send, say, a music file to someone else, but I can still hold that music file. I can send it to many people, and then those people can send that music file to other people. This one application of the internet disrupted entire industries, being able to copy information and send it around in a permissionless manner. Bitcoin is like that, but opposite, in that information can only be custodied by one person or one entity at a time. So packets of information can be sent around, but they cannot be copied. So the internet creates abundance of information. Bitcoin creates scarcity of information. An important point in understanding this is that it is the protocol itself that creates the scarcity. It doesn't require a centralized party or an issuer to make the information scarce like we have today. So we have currently an internet that's built, and we have entities like banks, central banks, that create sort of artificial scarcity because they're issuing, or they're controlling the scarcity themselves. You require trust in this institution to create scarcity of information. Whereas in Bitcoin, the scarcity comes from within the protocol itself, and there's no one to trust. There's no central party controlling or preventing the double spending of that information. So again, both are open source, decentralized, permissionless, and neutral. Important to understand about how the internet works is through layering, okay? And this has been built up over 50 years or so. We have all the way at the bottom a physical layer, moving all the way up to the application layer that we sort of interact with. We understand this is how we interact with the internet, through the application layer. Important to note in all of these layers is the TCP/IP protocol, and this is sort of the foundational core to the internet. And this would be akin to the Bitcoin blockchain, which I'll talk about in a second. But this was designed in the 70s, but first implemented in the 80s. And importantly, has maintained the primarily backwards compatible updates just to ensure smooth and stable improvement. And this is incredibly important to understand how Bitcoin is developed. And Bitcoin develops in line with this strategy. And it really is important to ensure backwards compatible updates only, because otherwise you can have major disruptions to the layers above, break the internet or cause significant downtimes on the internet, which would cause massive disruptions to the economy. Bitcoin, again, like the internet, is scaling in layers. We also have a physical layer through mining, nodes, and energy. We have the settlement layer, which is typically the layer that everyone understands Bitcoin as. This is what you call the base layer, or the blockchain layer. The settlement layer is optimized for security, okay? Whereas the fast layer, which has been built above that, is optimized for speed. But the trade-off is that in order to be fast, we have to sacrifice some decentralization. So it's a little bit less secure. But you don't put much capital on the fast layer. Most of your capital is on the secure settlement layer. Smaller capital goes on the fast layer, but slightly less secure layer. And then you have the smart layer too. So this is this is where things get interesting, in that you can actually program the Bitcoin to do interesting things. So, and then above that is the application layer, so the wallets or the ETFs and how people like us interact with Bitcoin itself. Okay, so the application layer doesn't have to be on top of all of this. It can be an application layer at each layer, of course. But just to give you some sort of reference here. So, an important point that I want to take you through is the understanding that Bitcoin is both a protocol and an asset. Okay, so I'm going to start with just understanding the protocol piece to it. So here's the settlement layer. This is the blockchain layer that everyone knows and understands Bitcoin as. And here's the blockchain. On top of that is built the fast layer. This is the lightning layer. Okay, so people would typically save at the base layer, the secure settlement layer, and transact on the fast layer. So this is what is available now that people can do now, today. Also, more recently, in the last year, Tara network has been released onto mainnet, and this unlocks more potential for all sorts of more interesting applications. Okay, and so this is more in the experimental stage, but what's looking like on the horizon is that we're going to be able to do a few cool things with the help of sort of neobanks and tech companies, is to issue fiat currencies, so being able to route currency, like the US dollar, on top of Bitcoin infrastructure. Okay, so basically reducing the friction of moving money around. We can actually build on top of Bitcoin the infrastructure for routing US dollar or Australian dollar on top of the Bitcoin network. Thus, because it's open source software, it makes it cheaper to do this. It's not on proprietary rails. So therefore you can have greater reach of those currencies into other jurisdictions of the world. It also unlocks the potential for issuing stocks, okay, on top of Bitcoin. So again, using Bitcoin infrastructure to move stock certificates around, potentially even allowing people to self-custody their own stock certificates again. This, if you've ever tried to move stock around to different brokerages, you'll know that it's an absolute pain. This would help reduce that friction, and it would make it 24/7 trading and potentially peer-to-peer trading. Again, this is what the technology unlocks. Whether the regulators in the US or in other jurisdictions will allow that to happen is another question. So Bitcoin is both a network or protocol or infrastructure, as well as an asset itself. Okay, so how visualize that? So I've got the infrastructure here, and I can route the Bitcoin on top of the infrastructure. So I can route Bitcoin little b, the asset, on top of Bitcoin capital B, the network or the protocol. So another point I want to make is people criticize Bitcoin because at the settlement layer, the base layer, you can't buy a $5 cup of coffee with Bitcoin without it costing, say, $2, $3, maybe even $5 in fees. Right, so that does hinder commerce at that level. Okay, but what people fail to tell you is that it costs the same in fees for buying a coffee as it does for sending billions of dollars across the world. And there was an example just in the last few months, someone sending $1.35 billion for $2 in fees. Okay, so that you could not do that with any other infrastructure at this moment. Try sending $1.35 billion on the current infrastructure across the world. Either A, you couldn't do it, or it'd be significantly a lot of compliance to get through, and it will also cost you a lot of money. Try sending that much money with gold. Incredibly expensive to do that with gold. Okay, so the point here is Bitcoin at the base layer is optimized for large transactions. There's theoretically no limit in size in terms of the value of the transaction. It's no different. It's no different if you want to send $10 billion on the Bitcoin base layer to the Bitcoin protocol. That is no different than sending $1. 10 billion is no different than sending $1. So it's really optimized for large transactions. right? So 1.35 billion is like moving Capita Spring in Singapore building, the entire building across the world. That's how much money that is. And you can spend your $5 buying a coffee for a penny on the fast layer, on the lightning layer. Okay, and this exists now. It's been around for a few years already. It's not news anymore. So this is how you achieve security and speed with Bitcoin. There's 3 layers. Okay, so here is an illustration, a poor illustration, nonetheless. Trying my best here. But this is the Bitcoin blockchain settlement layer, okay? Decentralized, many computers talking to each other. Equivalent in the current infrastructure is, say in the US, it would be called FedNow or FedWire. That's the infrastructure used in the US to settle payments between institutions and the central banks. Okay? So that would be equivalent. These are equivalent. Not the transaction layers. So people mistakenly compare Bitcoin blockchain with Visa, MasterCard, or SWIFT. No. Lightning, Liquid, and Arc, the transactional layers, are equivalent to Visa, MasterCard, SWIFT. Okay? Second layers. These are the secondary layers. These are the primary base layers. Now, they're quite different though. Bitcoin is permissionless, decentralized, and neutral. Fiat is permissioned, centralized, and partial. So quite a significant difference between the two in terms of how it's architected. And these differences are going to have a massive implication on which architecture is going to succeed in the long run. So what is the big idea here? Bitcoin is unified infrastructure for the transfer and storage of scarce information. That's a little bit of jargon just to say that Bitcoin is the internet of money. And that's a good book, that's worth a read.